What's up, family? This is Brother Alkaali, organizer of BAF, Black African Family. And today we're here to continue our sessions reviewing the NCUA's National Credit Union Administration's Charter Application Guidelines. For those of you who are not aware, in my community in Nebraska, we are pushing the initiative to establish a Black African owned and operated federal credit union. The Charter Application Guidelines is the step-by-step process that it takes to actually establish a credit union. For those who weren't here in last week's meeting, I'm going to provide the link right in the description for last week's meeting so you can get caught up. And if you reach out to me, I will also provide my email and contact. I will be able to send you a copy of the NCUA Federal Application NCUA Charter Application Guidelines for your own review. Now we're going to just jump right into it. Screen share. Okay. Let's get to it. So today we're going to go to footnotes. 1 second. NCUA, National Credit Union Administration, Federal Credit Union Charter Application Guidelines. I just want to stop on this part right here. And frequently asked questions. Can't get enough of this part. How long does it take to charter a federal credit union? The time required to complete the process varies depending upon the subscriber's knowledge, expertise, plans, services, and timeliness in submitting the required data. However, organizers working closely with the NCUA, completing the process step by step has on average ranged from 1 to 3 years, depending on the complexity of the proposed federal credit union's business model. Again, as long as we're following these steps, literally step by step, and we do get assistance or help from the different departments and divisions provided by the NCUA. As long as we do that, we can knock this out in a year, 3 years tops. So it's really how bad do you want it? If I'm gonna push, if I'm here pushing this, I push it myself. I'm gonna get it done in a year. That's my mindset. Me personally, I know that I'm not going to be here forever, but I got nieces and nephews, I got goals, I got dreams, I got ambitions, and the credit union is the first step we need to take. On the macro scale and the large scale, it solves a lot of problems, being that, because we're looking at the big picture. BAF, Black African Family, we are nationalists, Black nationalists, we are nation builders. And every nation has a central bank. The central bank is what collects and redistributes wealth into the economy. An economy is a collection of redistribution of wealth or economic system. This is the way we can fund the many different functions of our nation. Here in the US or America, we see ourselves as a nation within a nation. Therefore, we understand the need to have a way to get resources to the various parts of our nation so we can function. Going on down. And on the short term or the smaller scale, people need houses, mortgages. We see like in recent Wells Fargo, they denied half the Black applicants who applied for some type of mortgage or refinancing of their home. We see things like in Omaha, there was just a report that came out of this company out of, I believe, Ohio, a real estate company acquiring a lot of real estate properties out in Omaha, one of the biggest owners of properties out in Omaha. And gentrification. Everybody's big on anti-gentrification. This company is buying up these properties, renovating them if they do, and selling them at prices where, or renting them at prices where our people can't afford. You know, we realize that we can circumvent all of that by having the resources ourselves via a credit union to acquire these properties, uh, renovate them if need be, or we could have a cost analysis, you know, between renovating them or tearing them down and building new, and then renting or selling these houses, mortgaging these houses at prices our people can afford. Reverse gentrification. This is loading slow. Hey, 1 second. Screen share real quick. Slow connection, guys. My apologies. My apologies. Let's just go off of here. So we're going to start. This is the preliminary work. This is what we talked about in the first video. Here we're going to go to part 2. I'm going to continue reading. If you do have a copy of the guide, you could read, follow along. So part 2, support and location. Being after successfully completing steps of part 1. Reminder, upon receiving preliminary field membership approval, completing step 3, free consulting services from NCUA with the chartering process are now potentially available from NCUA's Office of Small Credit Union Initiatives, or SCUI. For more information on NCUA's free consulting services and OSCUI, see the Using This Guide and Frequently Asked Questions. So again, restating this, once we knock out the preliminary work and get our approval, we are able to receive help or consulting services, people who work with other credit unions or credit union initiatives to set up their credit union. So we're not just out here shooting in the dark on our own. You know, we'll have professional services that'll guide us through this. So, you know, how soon do y'all want this? I want it in a year. I wanted it in a year 2 years ago. So, you know, we're gonna go, let's get on. Step 4, identify subscribers. As defined by the Federal Credit Union Act, subscribers are any 7 or more natural persons who desire to form a credit union. Subscribers are responsible for preparing the charter application. A primary point of contact needs to be identified for NCUA during the chartering process. The primary point of contact may be a subscriber or professional organizer hired or appointed by the subscribers. The function of an organizer is to provide direction, guidance, and advice to subscribers. Under Section 104 of the Federal Credit Union Act, 12 USC 1754, I don't know what that little squiggly is. Continuing, subscribers need to undergo an appropriate investigation to determine the general character and fitness of the subscribers thereto. As outlined in step 9, officials and employees also are required to undergo such an investigation. A report of official and agreement to serve, NCUA 412 form in the appendix of the chartering manual. It's the document completed by the officials and employees to initiate this process. For a direct link to the chartering manual in NCUA 412 form, see attachment L. NCUA uses the same form for subscribers. Documentation required for step 4. A letter identifying the subscribers and their anticipated involvement and contribution to the chartering process, including time commitment, number of hours per month, name and telephone number of the contact person, if other than a subscriber, their anticipated involvement and contribution to the chartering process, including time commitment, number of hours per month, and an original report of official and agreement to serve, NCUA 412 for form, and a resume for each individual who desires to be a subscriber of the proposed federal credit union. Ensure the NCUA 412 form is completed in its entirety, including the authorization to perform a credit check, and that the applicant's signature is witnessed. Step 5, secure funding to cover startup costs. This is where it gets real, guys. Remember in the first section, they said it was estimated anywhere between upwards of $300,000 plus. The startup cost is what's going to cover the operational costs of the entire credit union until we make profit. Meaning the location, the labor, the utilities, all that. This is a business. Well, we in BAF, Black African Family, we're a nonprofit or forming a nonprofit organization. We have plans for fundraising. If you want to get involved in the plans for fundraising planning committee, or you have any ideas yourself for how we can make this bread, my contact is listed below. Reach out. All right. Chartering and operating a credit union costs money. A credit union must remain solvent, maintaining positive capital position at all times. New credit unions seldom generate sufficient income to cover operating expenses in the beginning. Therefore, subscribers must seek monetary donations or subsidies to cover startup and operating costs for the initial years of operation. Estimated startup and operating costs in chartering credit union provides guidance on typical startup and operating costs for newly chartered credit unions. See attachment L. For a direct link to an estimated startup and operating costs in chartering a credit union. Also, to assist subscribers with estimating the amount of donations needed to fund ongoing operations for the proposed federal credit union, see attachment D, donated capital estimate. If your proposed federal credit union group is unable to secure adequate funding, consider obtaining credit union services from an existing credit union. To locate an existing local credit union, see attachment L for a direct link to locate an existing local credit union. NCUA can also assist with locating an existing credit union. Types of support PFCUs generally receive include donations of cash, in-kind support, office space, furniture and equipment, computers, record-keeping software, and utilities. Sources of support, subsidies, or donations for PFCU may come from a community organization, churches, sponsoring organization, company associations, nonprofit organizations, economic development corporation, and other grant programs such as the Community Development Financial Institutions Fund. All commitments pledged must be placed in writing from their source and include the specific amount and its terms. For example, if a sponsor company offers to provide office space free of charge and to donate $200,000 to cover startup costs, the organizer's letter should indicate that office, location, the term, for example, first 36 months of operation, and the size, example given, 1,100 square feet of the free office space, and state whether it includes free electricity, telephone service, trash removal, cleaning, security, grounds, and maintenance, etc. The commitment letters must be supported by the donor's clear ability to provide the pledge support. This can be accomplished with a copy of the donor's audited financial statements or equivalent documentation. If funds are committed but not received, obtain a letter of commitment letter. Obtain a commitment letter signed by the donor. The donor must have authority to commit and provide funds, financial statements, or similar proof of available funds. If received, bank statement reflecting deposit of funds. Bank statements should be obtained at least 15 days past the last day of deposit to confirm the funds have cleared. Acknowledgement letters signed by the donor confirming the funds are donations to the credit union and are not deposits. All donors must be available to meet in person with NCUA representatives to confirm their understanding of the donated funds. If any commitments require payment, they are considered borrowings by the PFCU, not donated equity. As such, they cannot be counted towards the equity position of the PFCU. The only exception to this rule is secondary capital, which is only available to low-income designated credit unions. See Section 701.34C of the NCUA Rules and Regulations for additional information and requirements for secondary capital. See Attachment L for directly the NCUA Rules and Regulations. And I do not think we covered the low income designation. So when we finish with this, we'll put a pin in that for now. We'll go back and review that section because it might be a viable option for us. Who knows? Documentation required for step 5. In a letter addressed to the NCUA, describe the source of your funding and the actions and steps taken by the subscribers to obtain the necessary funds to cover the proposed federal credit union's startup costs and operations until the proposed federal credit union can become profitable. Provide details on the nature, terms, and conditions on all contributions, cash, non-member deposits, or other assistance provided to the proposed federal credit union. Any financial benchmarks for the proposed federal credit union that are tied to the commitments or the repayment should be discussed as well. Obtain the commitment in writing from the funding source and ensure the letter contains the following details regarding the commitment: name of the person making the commitment, name of the organization affiliated with the donor, address of person or organizations, telephone number of person or organizations, type and amount of commitment, start date of commitment, end date of commitment, and description of terms and conditions of commitment. Forward copies of commitment letters to the NCUA and submit copies of bank statements and or donors must recent audited financial statements or equivalent documentation to NCUA. Identify physical location. Each credit union must have at least one physical location, including proposed federal credit unions that are anticipating most transactions via the internet, kiosk, or other electronic means. Subscribers should determine an anticipated location of the main office and any other physical branch locations to be open at inception. If the exact addresses are not known, provide the city and state. The documentation required for step 6. In a letter, inform the NCUA of the PFCU's anticipated physical address of its main office and any branches to be open at inception. Step 7, survey the potential membership. Complete this step only after NCUA has granted preliminary approval for the field membership. The membership survey is one of the my mustache tickles my nose. I don't know if it's my nose hair or mustache hairs, but it's tickling. Sorry. The membership survey is one of the more important steps in the chartering process. The data gathered from the survey will reveal the level of interest and support for the proposed federal credit union. It will also help you better understand the specific financial needs of the membership, how they might use the credit union, and which products and services to offer and when. The results of the membership survey drive the business plan and financial projections and support the reasonableness of achievability of the projected outcomes. The results must clearly indicate support for a new federal credit union, its desired services. Designing the membership survey form. Each organizing group must design a membership survey form that gathers enough information to aid in developing and supporting the products and services set forth in the business plan, along with pro forma financial projections and related assumptions. A membership survey needs, for example, to gather such information to gauge the level of interest in the PFCU, determine the number of individuals willing to join the credit union immediately after its charter, determine the amount of initial deposits you can expect, as well as the amount of monthly deposits thereafter. Without this information, you will be unable to create reasonable financial projections. Establish the types of products and services desired. Determine the types of products and services to offer and when to offer them. Decide what your office hours will be and recruit volunteers to serve as officials and on committees. Attachment E contains a simple membership survey and cover letter that PFCUs can use to customize a survey that meets their needs. Conducting the membership survey. Who should you survey? After developing the survey form, the next step is to conduct the survey. Ideally, you will want to survey all persons within the field of membership, which is a possibility for smaller groups. However, for larger groups, to control pre-chartering costs, survey a random sample of the membership may be more reasonable. How to perform a survey. There are two types of sampling from a random survey: a statistically valid sample and a targeted sample. See below for a discussion on each type. A statistically valid random sample contains two key components. Every individual within the field of membership must have an equal chance of being selected, and the number of responses must be a fair representation of the entire field of membership. Equal chance for selection. A simple, statistically valid random sample involves surveying every nth person from a list of potential members. However, such a selection method is not required. You may survey the membership using other forms of random sampling. Examples of other forms of statistically valid random samples are illustrated as follows. If the field of membership consists of members of 5 churches, offering the survey form to all attendees at all 5 churches on any given Sunday, it will be considered statistically valid random sampling. You only survey the members of one of the 5 churches or limit the survey to a segment of individuals, example given those under the age of 25 or those with children, it would not be considered a statistically valid random sample. If the field of membership consists of a community charter conducting the survey as a member of different locations throughout the community, would be considered statistically valid random sampling. However, if only one segment of the community or one geographic area, example given, one city in the county was surveyed and not all segments of the community or various geographic areas had an opportunity to receive the survey, the distribution would not be deemed a statistically valid random sample. A targeted random sample does not contain the 2 key components found in statistically valid sample. Also, a specific number of responses are not required in a targeted random sample. Due to these shortcomings, the results from a targeted random sample cannot be extrapolated and applied to the entire field of membership population. The example below illustrates the differences in applying the results of a statistically valid random sample and survey compared to a targeted random sample. Example. Assume the field of membership population is 5,000. Surveys are sent out to 1,000 random individuals, and 500 individuals responded to a survey. Out of 500 responses, 150 or 30% expressed an interest in joining the credit union within its first 2 years of operation. The results of the 150 were based on a statistically valid sample. One could extrapolate the 30% favorable response rate, 150 to 500, divided by 500, and apply it to the entire field membership population. You can assume approximately 1,500 or 30% of the 5,000 individuals of the population would be interested in joining the credit union within its first 2 years of operation. The 2-year annual growth projections and the pro forma financial projections could be developed with this in mind. For example, the projected new members for the year 1 and year 2 could be 500 and 1,000, respectively, resulting in the total new members after 2 years of 1,500. The results of the 150 were based on targeted random sample. The survey results cannot be applied to the entire population. Instead, the 2-year annual growth projections and the pro forma would be based solely on achieving a total number of 150 new members over the next 2 years. Possibly 50 new members in the first year and 100 the second year, for a total of 150 after 2 years. Regardless of whether a survey is conducted based on a statistically valid random sample or a targeted random sample, it is inappropriate to survey only those individuals who you believe are interested in joining the credit union while excluding others within the field of membership. That is not a random sample, and the survey results and all data gathered from the survey would be unreliable and considered a weak foundation for developing a business plan and financial projections. You know, all of that goes without saying. Understanding who we are and the services we try to provide for our people. I look at the entire population of Black people here, and about 100,000 of us. My goal is to reach every single Black person. Every single Black person. Regardless of age, your parents could set you up with an account, whether they want trust services or savings. Every single Black person needs to be reached. That's just how I feel. We'll go from there. And then I guess I got a little bit of more work to do. So I was told that it takes 3,000 people to establish this. We're gonna drive our way through this. Because the number might be a lot less. Ain't nothing wrong with that. Contact the NCUA first if you have questions about whether your random sampling method is proper before performing a survey, particularly if it does not include every individual in the potential membership. All random sampling methods must be explained in detail, and if NCUA determines any random sampling method improper, the NCUA will require a new survey. Number of responses required. The next factor to consider when conducting a statistically valid random sample of potential membership is the number of survey responses you must receive to adequately predict the desires of the potential membership. The number of required survey responses will vary depending on the size of the population. You may use the table below to determine the number needed based on the number of total potential members, also known as the population size. The table uses a 95% confidence level and a 5% confidence interval. For example, if the proposed federal credit union's potential membership is 5,000 members, you must receive 3,507 responses to the membership survey in order to adequately predict the desires of the entire potential membership. Here's your, y'all can look at that. The proposed federal credit union should use this table when completing either a statistically valid random sample or a targeted random sample. How to determine the number of surveys to be sent out. Again, we're just every single Black person. Every Black person. Every Black person. So we determine we're looking at every Black person. But again, I was told that it only takes 3,000. The number is a lot less. We can figure that there. I have one guy, one brother. I'm a BAF. This is a community effort. So a lot of these decisions will be decided amongst our group, those of us subscribers who are going out and organizing this thing to make it happen. We will decide what is the best way to do this. Analyzing the survey results. Once you receive the survey responses, you must tally and analyze the results. If you follow the guidance noted above to conduct a statistically valid random sample, you may use the results to predict the desires of the entire potential membership. Using the example above, if you receive 357 responses to your survey, you may extrapolate the results to the entire membership of 5,000 members. Suppose for this example, 30% of the survey respondents indicated they would join the credit union within the first 2 years. If this were the case, you have support to anticipate a membership base of approximately 1,500 members. 5,000 times 30% is 1,500 members at the end of year 2. However, the statistical calculation assumes an error rate of plus or minus 5%. Thus, the estimated for the membership base must reflect a range of 1,250 and 1,750. These members can be viewed potentially as the best case scenario, 1,750, and potentially the most likely scenario, 1,250. Based on the NCUA's experience, new credit unions do not generally achieve the best case scenario due to several factors, including the length of time between conducting the survey and receipt of credit union charter. Not all persons who state they would actually join the new credit union. Therefore, developing a business plan and financial projections using the most likely scenario assumptions is highly recommended. Other scenarios can be presented as long as statistical support is provided. Also, please note, larger results will potentially occur when a larger potential membership base is involved. Subscribers need to use judgment whether those results based on the larger potential membership base are attainable. If deemed unattainable, assumptions must be modified accordingly. For example, if 30% response rate above for joining the credit union within 2 years was applied to a potential membership of 500,000, the result would be 150,000 individuals might join the credit union after 2 years. A review of membership growth in existing credit unions does not support a new federal credit union could add 75,000 net new members a year on average, as existing credit unions are not even able to do this. And I believe we can. Excuse me. In addition to a study completed in 2007, also confirms large membership growth during the first 2 years of operation is generally unattainable. NCUA's Region 5 office reviewed membership numbers on 29 credit unions, federal, state, and privately insured, chartered since 1987 in Region 5. Actual membership after 2 years of operation averaged approximately 550 members. Of the 29 credit unions, 11 reported growth in excess of 550. Of those 11 credit unions, only 3 reported actual membership growth in excess of 1,000 new members after 2 years of operation, have approximately 1,200, 1,700, 1,900. Therefore, subscribers with larger potential fields of membership will need to evaluate the results and determine whether their conclusions are reasonable and attainable. More than likely, subscribers will need to make adjustments and calculate assumptions on information more in line with the newly chartered and existing credit unions. Subscribers can review financial information, 5300 call report, and financial performance reports of newly chartered and other existing credit unions, help establish realistic assumptions. See attachment L for a direct link to the 5300 and the financial performance report. Mentor credit unions can also greatly assist with feedback regarding reasonable and realistic projections and assumptions. You gotta forgive me, guys. But again, you see that there is always hope. There are people that we could reach out to help guide us. I know a lot of us, we don't know, much about credit unions from a can of paint. Many of us are just brothers and sisters from around the way who are wanting to do good. So, but there's help. We can get this done in a year. Let's read this too. Prepare a narrative discussing the survey results. For example, the chart above shows the survey results indicate 10% of the individual surveys responded. 357 divided by 30,570. Of those responding, 30% were in favor of the supporting proposed credit union. Of those supporting the credit union, 85% pledged an initial share deposit, and 66% pledged systematic monthly share deposits. Based on the average initial and monthly pledge deposits, initial share deposits could total 300,038. Sorry, 338,247,000. I'm tired. 338,247. 3,717 times 91. New deposits averaging 21,300 times 7 each month thereafter. When extrapolating these results into the share deposit projections and the pro forma balance sheet, you will need to apply an estimated retention rate for the deposits. For example, 338,247 in initial deposits and 2,650 in monthly deposits for the next 5 months. The total potential deposit base could be 443,247. But a 25% retention rate for the monthly deposits would produce $300,064,497 in share balances at the end of the 6-month period. The pro forma balance sheet should reflect these deposits. Let's see how much we got to go. Okay, last page. Thank you for sticking with me. I am a little tired pushing through this literature. It's a lot of reading, guys, but taking the time out of my day, just a brother from around the way who's doing right by his community. I don't know much about credit unions other than what I can find on the interest of Matt and this guy, but we're here pushing big ambition, big ambitions. For more detailed illustration of analyzing and summarizing the results of the membership survey, see attachment F. Keep in mind that the NCUA relies heavily on your written analysis of the survey results to obtain a better understanding of the basis and content for business plan, projections, and assumptions. Documentation required for step 7. Tally of the membership survey's results. Do not submit the completed individual survey forms to NCUA unless requested. Written analysis of the membership survey results. Blank copy of the membership survey from written explanation on how the membership survey was distributed and written explanation of the random sample process used to select who received a survey form. And right now we just created the survey. We still got to go back to steps 1 to make sure that it is what is needed. Basically, what I've been doing is just reaching out to people, seeing if this is something they would support, just to get initial interest. From that initial interest, I gathered a group of you here. And in this group, I wanted to build with those who are able to go with me through this process to make sure that we get this thing done. Again, a year. And that ends it with part 2. But I do want to go back and touch on, as we said earlier, and then if anybody has any questions, just raise your hand in the chat. I will get to you. I do want to go back. So they talk about the low income designation, because we did skip over that the first time. I see, again, that could be a viable option. So let's look at that. Potential low-income designation. A proposed federal credit union can also seek low-income designation pursuant to NCUA rules and regulations section 701.24. See attachment L for direct link to the NCUA rules and regulations. A credit union can be designated low income when a majority of the credit union's potential or actual membership qualifies as low income. Low-income members are those members whose family income is 80% or less than the median family income for the metropolitan area where they live, or national metropolitan area, whichever is greater, or those members who earn 80% or less than the total median earnings for the individuals for the metropolitan area where they live, or a national metropolitan area for whichever is greater. For members living outside a metropolitan area, the statewide or national non-metropolitan area median family income or median earnings for individuals is used to qualify for the designation. The term low-income members also includes those members enrolled as students in college, university, high school, or vocational school. NCUA can provide assistance with determining if a proposed area meets the low income requirements. So, I believe all that, low income self-explanatory. I like how they included, high school, vocational school, college, university. So again, a lot of that is low income, maybe international students fit in there. But it is something that we'd be able, after we get preliminary approval, we get assistance from the NCUAs, like OSCY's office, to help us find out if we will meet these requirements. I hate to say it, but many of us understand the economic realities for Black people in this country, especially in Omaha. Omaha is where most Black people in Nebraska live. So I'll just leave it there. If a majority of the proposed federal credit unions' potential members are believed to be low-income members, a low-income designation can be requested at the time of preliminary federal membership approval is requested. The methodology for determining whether a majority of the potential members qualify as low-income members will largely depend upon the charter type being requested and whether the PFCU can provide address information on the potential membership. If NCUA is unable to complete a low-income determination based on the full membership request, NCUA will work with the subscribers to identify the needed documentation to complete a low-income determination. Absent the availability of needed documentation, the credit union can apply for the designation post-charter once membership is established. Although there is no minimum number of members needed to apply for a low-income designation, membership should be established to the point where adding new members would not jeopardize the low-income designation. Credit unions are designated a low-income or afforded certain benefits not available to other credit unions. Ability to accept non-member deposits from any source up to the greater 3 million, or 20% of total shares. A higher amount may be allowed if approved by the NCUA, depending further justification. Ability to receive technical assistance, grants, and low-cost loans from the NCUA Community Development Revolving Loan Program, SUSU. Technical assistance grants generally reimburse credit unions for expenses related to increasing member services, training staff, and marketing if needed to improve long-term financial health and stability of the credit union. Loans up to an aggregate of $300,000 may be approved. Note: anticipation of NCUA technical assistance grants can be used as supplementary sources of funding to strengthen the potential PFCU's ability to operate independently, but it cannot be relied upon as a primary source of capital. Grants are not guaranteed, would only potentially become available after charter and must be used for a specific purpose. Information on technical assistance grant program, the community development revolving loan program, and other resources. The low-income designated credit unions can be found on the NCUA website. See attachment L for direct link. I guess I can finish reading. I'm sorry, guys. It's a lot of reading. It's a lot of reading, but we're gonna just knock this out. We're almost done. Ability to receive an exception from the NCUA to grant member business loans in excess of the aggregate provided in Section 723.16 of the NCUA Rules and Regulations. The aggregate limit on credit unions' outstanding member business loans, including any unfounded commitments, is lesser of 1.75 times the credit union's net worth or 12.25% of the credit union's total assets. Net worth is all of the credit union's retained earnings, undividend earnings, regular services reserves, and other reserves. Part 702 of the NCUA's Rules and Regulation, prompt corrective action allows net worth to include secondary capital accounts that are uninsured and subordinated to all other claims against a low-income credit union, including the claims of creditors, shareholders, and NCU SIF, National Credit Union Share Insurance Fund. When calculating net worth ratio, see Section 701.34B of the NCUA Rules and Regulations for further information on secondary capital accounts. See attachment R for directly to the NCUA Rules and Regulations. Note, a secondary capital can be used as supplementary sources of funding to strengthen the potential for the credit union stability to operate independently. It cannot be relied upon as a primary source of capital. Secondary capital is viewed as temporary funding structured with the intent of returning it to the investor at maturity. Secondary capital generally is used as a liquidity source as well as a way to enhance earnings. A positive margin may be achieved if an investor agrees to a below market interest rate. If a low income designation is not obtained during the charter application process, the application should not include reliance upon any of the above benefits for the credit union's economic viability. So depending on where we're at as a community, this could be a viable option. I'll just leave it at that. And again, brothers and sisters, I did leave. Stop share. I did leave my contact information. Just reach out to me, send me an email, and I'll make sure to get you over a copy of the NCUA's Credit Union Charter Application Guidelines. You could review this for yourself. The BAF is a nonprofit organization we are forming to charter this thing. If you do not want to work with us or you think you could do this on your own, go ahead. The resources is out there. We just need to know that there are Black people in our area working towards making any type of financial institution a reality. Again, this is needed for our people. Just on a basic level to make sure that we have the resources to provide ourselves with a higher quality of life, mortgages for houses, loans for cars, schools, education. Because we've noticed, and me personally, I've never been able to receive a loan from anywhere. Maybe small predatory loans that, I'll give you $1,000, you pay me back $4,000, I realized that, I was in school for engineering, went to seek a loan, was denied. There's been times that I needed a house, was denied. I'm at a point now, I'm 29, that house is stability. I'm seeing that I'm paying $1,600 plus for renting a 1-bedroom condo. And there are people living in damn near mansions paying less than that. There's a gatekeeper. Other communities, they have gatekeepers. And they can determine especially for Black people. They have the power to determine our stability, our ability to provide housing for our families, which keeps us safe, our ability to get our children to and from places, get to and from work, receive access to financing to build our businesses. That leaves us vulnerable. That leaves us compromised. One of my biggest points of contempt is even with Black banks. They are not Black banks. They are banks. They are institutions. They are businesses, for-profit businesses. They do not represent the social, political, and economic situation for Black people in this country. Because again, with Wells Fargo, straight up just denied any type of financing to more than half of its Black applicants. And there are many other banks that have been sued and have litigation out there for hundreds of millions of dollars. And I'll share those links as well. These gatekeepers, it's just what it is. But it makes sense when you understand the the realities of the American economic system. That's more on a bigger scale. I'm only talking like this because I know that not everybody, there are people out there who understand these things. And people like me, you're the people that I'm reaching to, because you're the ones who are going to build this. If not in my area, maybe in your area, you're the ones who's going to do this. When I spoke with some of these Black banks where, there's like recently I was given a line of credit, or I wanted to get a car, having car problems, I got to get my son everywhere. I got to get to it from work. Went through a white bank. They told me, yeah, we'll put up 21,000. We just want somebody to cover the rest. You gotta come up with 9,000. We'll pay 21,000. So I'm like, cool. I bank Black, go to a Black institution, Liberty Bank and Trust. I put you out there, and I was flat out denied. And it was crazy that I got approved for more than twice the amount from a white bank and from a Black bank. I was denied. Then, speaking with the loan officer, he was a little bit more civil, but the branch manager was kind of rude. She actually hung up on me. The customer care person did not have too much customer care. But he made the statement like, so what do you expect? Just because we're Black to give loans to Black people, every Black person that applies. Sometimes I would have answered yes, yes. But I just sit back and I realize that when we get in positions of power, we don't believe in nepotism. In other communities, they do, and they figure that out. Example, when you have white judges, if white people commit crimes, they let them off. And Black people, others, they usually throw the book at them or give them what's required. Same with people who get pulled over. I can't understand this nepotism. It's not racism. It's, you're part of my group. You look like me. I can relate to you. I'm going to give you a chance. When we look at that situation as it applies to the housing market, look back at the financial crash, 2008, the financial collapse, and the bailout thereafter. But, when white institutions literally were giving white people who could not afford these $100,000, $300,000, $400,000, $500,000 houses. They were just writing the loans. Yeah, here's a mortgage. Get the house. Get the house. Get the house. And as soon as we hit a recession and they were unable to meet their obligations, make their payments, we see that it caused a crash of the economy. They gave each other loans, mortgages, to receive housing, even though they could not display the ability to afford that or to maintain that, to the extent where they caused a financial crash. They didn't look at, it's crazy. Black people, we treat you on a number basis, not on a personal basis, not on a, part of my group, look out for you basis. That's something that I want to change, especially with banking. Regardless of, because every life is a promise. I could give you a loan, you could get hit by a car tomorrow. Life is a promise. So if you're telling me you want to go to school, you go to school to do engineer, I want to make sure you get that loan. But I'm also going to provide you with materials and why engineers are important to the Black collective. Same with nursing, why nursing, and doctors, and lawyers, and any type of field you can think, why all of this is important to the Black collective. You need housing. I want to make sure that your family's secure. Your house is what protects your family. I want to make sure that your kids have somewhere to sleep at night. Homelessness is an issue for us. You need a car. I want to make sure that you can get to and from places that you need to go. I didn't think it was rocket science. Being a Black lending institution, when it comes to the immediate needs of Black people, things that are necessities, I should be able to extend you a line of credit to make sure that you can cover those things with the mutual understanding that you're not going to fuck it up. Because when you steal from us, you're stealing from the collective. When you decide not to pay us back, you're choosing not to pay back the collective. So we can continue this system, this cycle of being able to provide for one another and making money while doing it. Another thing, Black things. Even if you're going to judge me on credit score, this is the question I asked this brother, the loan officer. I said, "Are you Black?" Yes. Do you believe Black people deserve reparations? After a little bit of running around, he says, "Yes, yes." Like, okay. My credit score is trash because I intentionally choose not to pay back white people. My granddad taught me you don't owe a white man shit but an ass whipping. Excuse my language. You don't owe them nothing but an ass whipping. So being with people who are old and do reparations, does it make logical sense for me to pay you back when you owe me? When you call yourself a Black bank, you're operating with that understanding. If you're not operating with that understanding, you're not a Black bank. I believe in banking and financial institutions that look at, one, can you afford this? If you can't, I want to figure out why you can't. Get you like business development. If we're having business development, we're acquiring properties that we're wanting to control the entire cycle, the entire ecosystem. So if we're buying properties, we're making sure we're investing in construction companies. What do? How can I use you to either, if you are unable to make ends meet, how can I place you in a position to do that? Not putting you in with these companies. How can I make sure that you are guaranteed to pay us back? Do you pay back Black people? I don't care what you owe anybody else. Are you going to pay us back? We're Black. I don't care about no one else. And that's what I look at. And establishing this thing, that's what we're going to look at for our group. Nothing else. Especially the time, y'all see what's going on. Y'all see what's going on. I don't like talking about the negative. I just want to prepare for what's coming. I want to make sure my people have a place to rest their head if need be, to protect their family, have the ability to get access to cars just in case we need to go somewhere, caravan. I'll say the Walking Dead. That's what I'm saying, the zombies. But, I want to make sure you have the resources necessary to take care of you and yours. And I got a year. I'm giving myself a year. I ain't gonna be here forever, but a year. I'll push this thing for a year. We'll see what happens. Anyways, peace, family. Keep it pushing. Brother Alkaali, BAF.